Hello, good morning children. Welcome back to today's online session of Sri Gokulam Public School, Guruvayur. Children, today we will discuss a new chapter from your accountancy, chapter 11, that is Special Purpose Book, Part 2. Other books. In Special Purpose Books, Part 1, we have discussed about the cash book, in which we saw single cash book, double cash book. We saw the preparation of petty cash book, isn't it? Today we will discuss about some other books. So, subsidiary books, which is also known as special purpose books or special journals or books of original entry. So, this special purpose book is known by all of these names. You have to remember these names. Okay. These are subdivided into two main parts. The first part is subsidiary books, or which is also known as special journals, and the second part is journal proper. In subsidiary books, again we classified into 5 different categories. The first one is cash book, second one purchase book, third one is sales book, then we have purchase written book, and next is the sales written book. Out of this 5 classification, we have already studied the cash book in our previous chapter. Okay, today we will discuss about the purchase book and sales book. So let us start our session with purchase book. So purchases book, which is also known as purchases journal. Let us see what is special about this book. Purchases book is a subsidiary book in which credit purchases of goods are recorded. So see children, in purchase book we record only the credit purchase of goods. Cash purchase of goods and purchase of non-goods like fixed assets are not recorded in purchase book. This is a very important point to be remembered related to purchase book. The first thing is you record only the credit purchase in the purchase book. Second thing is you are not supposed to record the cash purchases of goods in the purchase book. And the third important thing which you have to remember is you should not record any purchase of fixed asset in this purchase book. So if you are purchasing any fixed asset, you will not record it in the purchase book. Okay. So these 3 important concepts you have to know about the purchase book. Now, next point. So when we purchase any goods from the seller or the supplier, he will issue the invoice. Okay. So when we receive the invoice, on that basis, on the basis of source document which is known as invoices, on that basis we make the entries in the purchase book. So you should know that on what basis the entries are made in the purchase book. So your answer should be on the basis of invoice received from the supplier. Okay, after deducting the trade discount allowed to us, the net amount will be shown in this invoice. Okay children, so this was about the purchase book. Now let us see what is the format of a purchase book or for purchase journal. So see children, in purchase book we don't have a debit or credit column like we prepare in ledger account. Ledger or purchase account, in our previous class we have studied about ledger, preparation of ledger, isn't it? We have studied how to prepare purchase account also. So in that purchase account we know that we have debit side and credit side. But what is the speciality of purchase book is, it is not at all like a ledger. We don't have debit or credit side in this purchase book. Okay, so just see the format of purchase book. We have a date column, particulars, invoice number, ledger folio, details, cost, freight and cartage expenses, etc. Then total. Okay children, so in some of the problems you may find that cost or freight and cartage expenses not given to you as a format. So if in the question this freight and cartage expenses is not provided, then you can skip this column. Okay, you can skip the column for cost and freight. Okay, so as per the question you can decide whether to have the freight and cartage column or not. Now let us do one problem related to purchase book. From the following information of Messrs. Narain and Company, Delhi, prepare the purchases book for the month of February 2020. So here in front of you are given some transaction, and on that transaction basis you have to prepare a purchase book. Okay children, so when you prepare a solution for this problem, the topmost part what you have to write is the name of the company. So in the books of Messrs. Narain and Company, Delhi, what are you preparing? You are preparing a purchase book. they are asking you to prepare purchase book. So that should be written over here, purchase book. And at the top, what is the name of your company, that should be written. Okay. Now prepare a box. In that box you will write date, particulars, invoice number, ledger folio, detail and amount. You can see here Fred and cost, that two columns are missing because in this question we don't have an item related to Fred or cartage expenses. If it is there, then you can provide it. Okay. Now let us see the transaction one by one. On February 1, purchase from Messrs. Brown and Company, Kolkata. What you purchased from Brown and Company? You have purchased 5 gross pencil at the rate of rupees 1200 per gross, and you purchased 2 dozen register at the rate of rupees 500 per register, or per dozen, sorry, less trade discount at the rate of 10%. So this is your first transaction. This is the credit transaction related to purchase you made from Brown and Company. Okay, so it was this transaction have taken place on February 1. So in date you can write 2020 February 1. You are purchasing from Messrs. Brown and Company, Kolkata. So children, you are recording the credit purchase of the items. So you have purchased goods from Brown and Company, Kolkata. You wrote that. What are the items you are purchasing from them? 5 gross pencil at the rate 1200 per gross. So as it is given in the question dicto, you copy it in this particular column. Okay. 2 dozen register at the rate 500 per dozen. Multiply this 5 into 1200, you will get amount 6000. You put it in the detail column. And 2, that is 2 dozen register into 500, you have to put it in at the amount of 1000 rupees, you will put in detail column. Now add this amount 6000 and 1000. When you add, you will get 7000. What next? They have mentioned that this person, this supplier, they have given you trade discount on the total amount, total payment amount, that is 7000 is the amount you are supposed to pay to Mrs. Brown and Company. They have allowed you a discount of 10%. So on this 7000, if you calculate 10% discount, 7000 into 10 divided by 100, you will get 700. Okay, so less trade discount 700. When you subtract 7000 with 700, you will get an amount of 6300 in the amount column. Right? Now next is February 4. Purchase from the paper company, Delhi. So write down here February 4, the paper company, Delhi. Just below that, what are the items you purchase? Separately you write down here 8 reams of white paper at the rate 500 per ream. It is given in the question, okay, as it is copied over particulars. Then 10 reams of ruled paper you have purchased for 600 per ream. So after writing here, just put the amount, that is 8 into 500, you will get 4000, that you put it in detail column. Then 10 into 600, you will get 6000, put it in the detail column. Add this together, you will get 10,000 as the amount for your purchase made from the paper company limited. Then less trade discount of 10%. 10,000 into 10%, you will get 1,000. So 10,000 less 1,000, you will get 9,000. That is the total amount you have to put in the amount column, right? Next transaction is on February 5. Purchase 8 Reynolds pens at the rate 5 each from Mrs. Verma Brothers, Delhi. See children, only one item is there. Okay, so it is a credit. See, it is not mentioned that it is a cash transaction, and the name of the company is also given to you. So you can understand from this, it is a credit transaction. We have to record it in the purchase book. So February 5, Messrs. Verma Brothers, Delhi, 80 Reynolds pen at the rate of rupees 5 per pen. So 80 into 5. You will not record it in detail column because only one item is there. If more than one item, then you can specify it in the detail column, and the total of that you can put it in the amount column. But because only one transaction took place with Verma Brothers, you can write the amount in the outer column with the amount column itself. Now next what? Make total of all the 3 items of credit purchases. So when you make all the 3 items, add 3 items together, you will get 15,700. And when are you doing this? At the end of the month of February. The last date of February is 29. Okay, so February 29, purchases account. So children, here is the February 29 purchase account debited 15,700. This amount will go to purchase account. Okay, so this is purchase book in which you are recording only the credit purchases. From this book, whatever answer you will get, that is 15,700, you will show it in the purchase account. Okay, so this is what purchase book is all about. Now let us discuss next type of subsidiary book, that is the sales book, which is also known as sales journal. So sales book or sales journal is a subsidiary book or a special journal in which credit sales of goods are recorded. So we record all the credit sales of goods in the sales book. We are not supposed to record any cash related sales in the sales book. Only credit sales are recorded here. For recording the cash sales, we record it in the cash book. Okay, children. Now, also credit sales of items other than goods dealt in by the firm, that is sale of assets, are not recorded in the sales book. So one more thing what you have to remember, same like you had in purchase book, sale of fixed asset will not be recorded in the sales book. So what all things we will not record in the sales book? The first one is cash sales will not be recorded, and the second item is sale of fixed assets will not be recorded in the sales book. And what are the things which we record in the sales book? Credit sale of goods, that will be recorded in the sales book. Okay. Now, entries in the sales book are on the basis of invoice issued to the customer with the net amount after allowing trade discounts. So children, we record the entries in the sales book on the basis of the source document, that is invoice, which is issued to the customer. Okay. So the invoice which is issued to the customer, on that basis we record the entries in the sales book. Now let us see the format of a sales book. So same like purchase book, we have to write here sales book as a title. Then we have date, particulars, invoice number, ledger folio, details, sales value. Instead of cost value, in sales book we have sales value, and freight and cartage, etc. These expenses, then total. Okay, so sales value is same like purchase book. Sales book is same like purchase book. Only difference is in cost. We have cost value in purchase book, but in sales book we have to write the column for sales value. Okay, so this is the format for the sales book. Now let us do one problem. Record the following transaction of Messrs. Kishore and Sons, Delhi, in their sales book. So you are asked to prepare a sales book. Okay, and following transaction is given to you. So as a part of your solution, what you will write? First of all, write the title, sales book. Then prepare a box. We saw the format in an earlier slide. We have date, particulars, invoice number, ledger folio, details, and amount. You can see here the sales value and the freight and cartage column is been ignored here, because those freight charges is not given in the question. That's why they have ignored that columns. Okay, so let us see the transaction one by one. Date is not provided to you, so you can avoid that. So just see, sold to Messrs. Gupta and Verma, Delhi. You have sold some items to Gupta and Verma. This is a credit sales. So first of all, you write down Messrs. Gupta and Verma, Delhi. Okay, you can underline this after writing the name of that party. You can underline this, and just below that you write down the item which you have sold to Gupta. That is 30 shirt. It is given in the question dicto. You copy it here in the particular column. 30 shirts at the rate ₹40 each. So 30 into 400, you will get 12,000. Okay, next is 20 trousers at the rate of ₹600 each. So 20 into 600, you will get 12,000. Making total of this, you will get 24,000. And from this 24,000, there is a trade discount of 10%. You have sold these goods at 10% trade discount. So 24,000 into 10 divided by 100. So that discount you will reduce from the total amount. So 24,000 less 2,400. Outer column, you will get the amount as 21,600. So first transaction is over. Now moving to the second transaction. What is the second transaction? Sold old furniture to Messrs. Saigal and Company, Delhi, for ₹8,000. So you have sold an old furniture. Whether it is a old furniture or new furniture, you are not supposed to record any fixed asset in the sales book. So what does that mean? You are not supposed to show this item or this transaction in the sales book. Okay, so that you can avoid this transaction. You can avoid. Moving to the next transaction. Sold 50 shirt to Messrs. Jain and Sons, Kanpur, at the rate of ₹400 each. So write down the title as Messrs. Jain and Sons, Kanpur, underline it. Then write down the item which you have sold to this company. That is 50 shirts at the rate of rupees 400 each. So 400 into 50, you will get 20,000, because only one item is there. You don't have to specify that in the details. You can straight away write that total amount in the amount column. Moving to the next transaction, sold to Messrs. Mathur and Jain, Kolkata. So 2 items are there. So write down Messrs. Mathur and Jain, Kolkata. Underline it and just write down below 100 shirts at the rate of rupees 400 each. So 100 into 400, you will get 40,000. And overcoat you have purchased, 10 overcoat you have purchased, and rate of 1 overcoat is 1,000. So 10 overcoat at the rate of rupees 1,000 each, you will get 10,000. Adding this together, you get 50,000, and from that less trade discount at the rate 10%. So 50,000 into 10 divided by 100, you will get 5,000. 50,000 less 5,000. What is the amount you are receiving, or you should receive for this credit sales? 45,000 from Mathur and Jain. So for each of these parties, you got the mentioned amount. Now what at the end of that month, you will make the total of all these 3 amount. So adding these 3 amount together, you will get 86,600. That is the sales account. This amount will go to the sales account. Okay, this is the sales book, but the final result of sales book amount which you received from this particular book, that will go to sales account credit side. Got it, children? So this is how sales book is prepared. Let us discuss purchases written books and sales written books. Purchases written books, which is also known by returns outward book. So those goods which were purchased on credit, if they are returned to the suppliers or the sellers of the goods, then it will be recorded in the purchase written book. Neither the return of goods purchased on cash nor the return of any fixed assets are recorded in this book. So that 2 important thing you have to understand over here is, here the goods which are returned to the seller by the customer, if it is purchased on cash basis, and those fixed assets if purchased, these 2 will not be recorded in the purchase written book. Dear students, goods may be returned because of any of the following reasons. So these are the following reasons because of which goods may be returned. Now let us do a problem related to purchase written book. Record the following in purchase written book and post them in the ledger book. So you are asked to prepare purchase written book as well as to post the item in the ledger book also. Okay, so let us do that. The date given to you is 2020, January 10. Returned 2 washing machines purchased from Messrs. Manohar Electronics at the list price of rupees 7,000 per machine. So cost of one machine is 7,000, and they have purchased 2 washing machine. Okay, less trade discount 20%. So 2 washing machine have been returned by one of the purchaser, that is Messrs. Manohar Electronics. So you are preparing purchase written book. The format of the purchase written book is also the same like we did in purchase book or sales written book. So some columns there is different namings, so that I will mention when we are doing this. Okay, the next one is January 24. Return 6 pen drives to Messrs. Sonica Electronics, purchase at the rate rupees 1,000 each. Okay, so now let us move to the solution part. The title of this problem is purchase written book. You are preparing purchase written book. You write down date. So how many columns are required? Date column should be written. Particulars column. Debit note number. As I told you earlier in the earlier slide, when you prepare purchase written book, you are supposed to show the debit note. So you are supposed to prepare a debit note. So a column for debit note number should be provided here. Then we have ledger folio, and then detail, and then amount. Children, you can do this problem as and when I am explaining this. You can pause this video and do the problem along with me when I am giving the explanation for this. Okay, it will make your concept clear. So January 10 is the first transaction taking place. So the first transaction is taking place with Messrs. Manohar Electronics. He is the purchaser who is returning the product. So you have to write the name of the party who is returning this product. So Messrs Manohar Electronics, then underline it, and then just below that write down the item which has been returned. 2 washing machines are being returned and rate of one machine is 7,000 each. So 2 into 7,000 will give you 14,000. Okay, so you got 14,000 over here. Next is a trade discount is also related to this product. So let's trade discount 20%. So on this 14,000 you have to calculate 20%. That means 14,000 into 20 divided by 100. So you will get 2,800. Okay, listen carefully. You have to calculate trade discount on this 14,000. Okay, the value of the product. So 14,000 into 20 divided by 100. So after calculation you will get amount of 2,800. That is your trade discount. Now subtract this value, 14,000 less 2,800. So you will get the value of that product 11,200. So after discount, the goods which has been returned is of the value 11,200. The same you will write in the amount column over here. Okay, now next transaction is taking place on January 24. So you write down January 24, Messrs Sonica Electronics. So name of that company I have to write here. And what they are returning? They are returning 6 pen drives. The value of one pen drive is 1,000. So 6 into 1,000, that will give you 6,000. Okay, 6,000 is the product which is returned. No discount is information is given provided over here. So 6,000 you can write in detail column. The same amount you can write in the amount column as well. Now make a total of both the returns which have taken place in the month of January. So 11,200 plus 6,000, adding this together you will get 17,200. Okay, what you will write over here? At the end of the month, that is January 31, you have to write purchase return account. See, the amount which you are getting from purchase return book, that you have to transfer in purchase return account, children. So purchase return account, as you know, it should be credited. You write down credit over here, then write down the amount 17,200. So this is how you have to prepare a purchase return book. Now they have shown in this question they have also asked to prepare ledger book. So see which all ledger book you will prepare. You will prepare the ledger book for Messrs Manohar Electronics, then Messrs Sonica Electronics, and then purchase return account also you have to prepare. See how you are supposed to prepare. Manohar Electronics you have to write down the ledger. Then on 2020 January 10 the first return is taking place. So to purchase return account 11,200, that you have to record over here. Then Sonica Electronics account debited to purchase return account. January 24 is the transaction taking place. Okay, so purchase return, as you know, purchase are debited and purchase return are credited. So same we did here. Sonica Electronic account debited to purchase return account. Sonica Electronic account debit side you have written purchase return to purchase return. Now you have also prepared purchase return account. So in purchase return account, what you will write? 2020 January 31. January 31. See the amount. This amount will go in the over here. Okay, 17,200. So what you will write in particulars related to this? By sundries as per purchase return book for January 2020. You will not record separately for Manohar and Monica Electronic. Instead, you will record the total sum of this. So 17,200, and this is the wordings you have to use whenever you prepare a purchase return account. Okay, so this is how you have to prepare a purchase return book and an account related to a problem. Moving further, let us discuss about sales return book is also known as return inward book. Okay, so sales return book or return inward book is a subsidiary book like purchase book or purchase return book. It is also a subsidiary book which maintain the record of goods or material returned by the purchaser that had been sold on credit. So those items which are sold on credit, when they are returned back, it will be recorded in the sales return book. Okay, so remember the other name for sales return book also, return inward book. Okay, both the name you should know. Now this book is maintained if the return of goods is frequent, otherwise it can be recorded in journal. So if the return of goods is frequent, we can say transaction, better you prepare a separate book for that. Otherwise you can record such transaction in a journal also. A credit note is prepared when goods are returned by the purchaser, and on its basis entry is recorded in the sales return book. So children, if we are preparing a purchase return book, then we have to prepare a credit note. Okay. Now let us move to a problem related to sales return book. Prepare sales return book in the books of Lal and Company, Delhi, from the following transactions. So let us go for a working of this. See, transaction took place on 2020 April 6. Goods returned by Ganga Prasad and Company, Delhi. 2 table fan at the rate ₹1000 each. A discount was also allowed at 15%. Then April 12, the second transaction, Prabhat Electricals, Agra, returned defective room cooler at the rate ₹4,250. So what are you asked to prepare? Sales return book. So the title of for the solution should be sales return book. The column for date, particulars. Here what are you supposed to prepare? Credit note number, the ledger folio, details and amount. I hope you are doing along with me. So have you finished preparing these columns? Now next, the first transaction have taken place on 2020 April 6. Write down the title for this, Ganga Prasad and Company, Delhi. This is the first company, the company with who have returned the sales return have taken place. So 2 table fans have been purchased at the rate ₹1000 each. So 2 into 1000, that will give you 2000. Okay. Next, less trade discount is related to here. So on 15% you have to charge. So on what you will do this 15%? On 2000. So 2000 into 15 divided by 100, you will get 3000. So 2000 less 3000, you will get 1700. So this is the amount of goods which is been returned back. Okay. Now next is, now students, for April 12th we have Prabhat Electricals from Agra. He is also returning the goods which was sold to him on credit. So what is the item which we have sold him? 1 room cooler whose cost is 4,250. So this good is been returned by him. Only one product is there, and also sales return is not there. So we can straight away, from details we can straight away write the same in amount column. So total number of sales return in the month of April by April 30 is, we have to make add these two items, 1700 and 4250. If you add together, you will get 5950. Okay. So this is the sales return. This amount you will go to sales return account on April 30th. It will be debited. Okay, sales return account will be debited with 5950. Clear? So this is how sales return books are prepared. Okay. So only credit related sales items will be recorded in sales return book.